Here's 9:30, and then 10:30. We'll go to 10:30 and time. So all I'm doing is moving this around until I see 10:30 a.m. at the bottom of the chart. There you go. So now all I'm going to do is just snap it down to the lowest low. Okay. So there's your first hour's range. It's not the opening range, which is 30 minutes, but this is the first hour's range or first hour's dealing range. How is this useful? How does it benefit us? How do I use it? Well, when we were trading down here, okay, my concern was that eventually we're going to create some kind of a low, which is what I wanted to see. And at 10 o'clock, we had the market have its first 30 minutes. That's this. That's opening range. Okay. The first 30 minutes is opening range. I don't care what anybody tells you about a 15-minute order block. I'm not order block, opening range, or a 5-minute or a 10-minute. I could care less. Everybody's entitled to have their own interpretation, and that's fine. I'm not beating any of that up. Okay. What I'm trying to teach you is if you don't see it like this, you're going to miss some details that are helpful to you. Okay. And you determine if anything helpful to you in that regard. So we're going to go back to 10:30, which is your first hour's dealing range. First business fair value gap, trades up to it, runs a short-term low, trades down, creates a low. Now, first 30 minutes is done. Opening range is done. So now we're going to watch and see what this does. It starts to retrace a little bit. I mentioned this here as a potential inversion fair value gap. And I talked about this becoming a potential inversion fair value gap, okay, or at least drawing up to this one. We saw it meander around in here, finally came up in here, and then traded up into midpoint. Notice where this is forming. So this 10 o'clock high, why am I calling it that? Here's 10 o'clock. After 10 o'clock, what high forms? This. This is the high that the lunch macro will target. If we're down below it and we are entering 10:30 to 11:30 in that vicinity, because it can be a little bit early. Okay, I saw a person leave a comment. You said that lunch is 11:30 to 1:30. Yes. But because things are so skewed, it can happen a little bit earlier. It can happen a little bit earlier. The bleed over from London close. Remember, there's traders participating in all of these markets, and they're closely correlated. So if London's closing up shop around 10 to 11 o'clock, our local time and Eastern time, just be mindful that that could create the low of the day or the high of the day. And that influence over price action will be visible inside of the creation of the daily range. Long story short said, when we're looking for a lunch macro retracement target or objectives, we're going to be looking for from 10 o'clock, you would have it like this. Okay. Over here, we're at 1046. So the criteria is there, 1030 to 1130, that little sweet spot. Okay. It can start the lunch macro. But I was talking about how, it could be a macro price run using this gap. And I said that if we can get below, let me move this out of the way. If we can trade below here, like we were doing here, as soon as that candlestick closed right there below that midpoint of this wick, once we saw that, I said before it did it, this is in many ways a confirmation if you're going to trade the PM session. And I said, I won't be coming back for the PM session, but this tells you, okay, this tells you that the day is going to continue going lower. You can anticipate lower prices in the afternoon. Don't just say, oh, he said it right here, it's good enough. Go back and watch what I said yesterday during the live stream. The point I'm teaching is I was telling you that this wick here, if we trade below that on a closing basis, dropping down, as we were making a run just shallow below that low here, and that's all we saw right there. Okay, remember the analogy I talked about a little chihuahua and like this, all this price action is like a big porch, and the chihuahua runs off the deck or the porch. It would meet something to scare it back on the porch, go back inside the range. Okay. and it did that very thing here. So I was telling you to watch this little gap to see if it can use it, and it didn't quite touch it there, right there on that candlestick. This one here, the low. So that's strength. It rallied up. We were watching it pull back a little bit, rallied up again, and right here on this candlestick, it failed to go to that 10 o'clock high as I was calling it live. And I told you that was manipulation. That was good old Phil. Okay. I talked about at the time of this candlestick's forming beforehand, I told you that we would probably run below. And if I'm wrong, it'll just keep going lower. But because of the first hour's range, which is what this is, look at the time at the bottom of the chart. There's 10 o'clock. Did I just move it wrong? Hang on 1 second. There you go. First hour's range low is right there. What have we done since the opening? Right here. We gapped lower, never traded into the gap at all. Came all the way down, created a low at 10 o'clock, a little bit of retracement. What's this? That's the halfway point or equilibrium of first hour's dealing range. That also qualifies the macro, lunch macro, run to that for a trade. It sells off. The bodies are respecting this gap over here. So this is reclaimed bearish fair value gap there. And then sends us down into that little shallow run below this. And I said all these things live, walked you through it before it actually happened. So for the people just watching this as a recording, or if you're watching it live right now and thinking to yourself, this has already happened. Anybody can do this. No, go into the live stream and watch what I did yesterday, and then you do that. I'll watch your live streams if you can do that. Okay. So sell side below here, I said live, it's going to probably just go below a little bit and come right back into the range. We don't want to see that if it's going to continuously go lower. If it can do these things, what things? Now here is the if then clause that's algorithmic. Go back with this logic I'm going to talk to you about right here. Go back to what I was saying about all these things here, and you'll see how it's plug and play logic. And then try to tell me there's no algorithm, okay? Because either I'm absolutely screwball loose in the head, insanely crazy intelligent, or a time traveler, or it's really rigged and I know how it works. Okay, that's all I'm saying. That's all I'm saying. The decision's yours. But this low, if we have that low taken out here, it'll be shallow. Why would I expect it to be a shallow run below this low and come back into the range? Because this low here forms, and we went into 1031. What's established now? The first hour's range. Now, I am not a breakout trader. I am not a support broken, chase it, go short, or a resistance broken, chase it, go long. I don't like those ideas. I think it's stupid to do that kind of stuff because you don't really know what you're doing. And one could argue and say, no, it's really simple and I can make money with it. Yeah, I can make money flipping a quarter too. Okay. But I'm not going to risk money. I'm not going to risk fortunes on flipping a coin or what the stars are saying, what the horoscope says. I'm not doing that stuff. Okay. I'm not doing it. You can do whatever you want. People go to the casinos and they do all kinds of stuff. They think they're going to win because of the gout flared up. Okay. They got athlete's foot on the left foot, not the right foot. That means it's lucky. So this low being taken out here on a shallow basis is because we have already established the first hour's dealing range. And it's been one-sided right from the opening bell, lower. Okay. So now who's making money? Shorts. This drop down here, as I mentioned, that's going to entice people to do what? Chase it on a breakout. Well, it's been going down all morning. It broke support, so it's probably going to keep going lower. What we're doing is we're flipping retail logic upside down and attacking them with it. That's all we're doing. This is how you find wonderful turtle soup setups. Okay? This is the logic behind it. Because we had to close here below that consequent encroachment, that wick, any retracement here sets the stage and tone for the afternoon sell-off. Why would they want to come back and take out this high here? Because stop loss would have been trailed on shorts just above this high. It's also halfway point or equilibrium of the first hour's dealing range. Just looking at it like this, my eyeball was suggesting this has got to be real close to the halfway point. I didn't need to draw a line on top of it. Okay. Just looking at it. And it also fits the criteria. I tell you that the algorithm will refer back to 10 o'clock. What's the high that forms after 10 o'clock? That's this one. When price was down here, it would likely drop to here. This was manipulation. They stopped it dead in your tracks because you all were doing what I told you not to do. You're following me and you're putting your limit orders there. So Phil came in, turned the market around, and took you right into your stop loss if you were trading it. I said, this is where I would like to see it support price. If it can't do it, then I would be personally done. I killed the stream the very next minute. Phil took it right back up to there. But there's nobody watching me, right? There's nobody watching me. I got 2 million people, okay? 2 million people and so many ghosting watching my stream. You can't trust those numbers, okay? Trust me, there's more people. When I go and I do Twitter Spaces, do you know that the United Nations listens to it? You don't believe me? Look at the audience members. How about that? How about that? But there's no algorithm, right? Old ICT's got the nations of the world listening to them. Because when I talk, these ticks react. These prices, they react. Why? Because I know what they're going to do. Not because I say something, but because I know what they're going to do. I told you on this candlestick as it formed live, that right there is what we're looking for. That is the false run. And now we can look for it to get into this here and then go for that liquidity there. That's the lunch macro. And you'll see it happening in the live stream. Here, when I tell you that's manipulation, that's fill, it pulls back and goes right back into consequent encroachment of that wick. Look where the bodies are. See that? Starts to rally, and in one candlestick, look at the low to high. In 1 minute. 1 minute. About 100 handles. Goes right to the top of that imbalance, which is this candlestick's low. Look at this candlestick's low. See that? 868 even. Okay. 868 even. The high of this candlestick. Oh, I'm off by a tick. Okay, that's still good. It didn't go beyond it. It's inside that range. That's good. Then they use it here. Where's my, is there a missing candle there? Look at that. 829. I'm sorry, I'm 829. What am I talking about? 1129, 1130 should be and there isn't one. That's weird. Let me know on X if you're missing your 1130 candle because I don't have one on mine. That's wild. But anyway, they took it all the way up and just fell short of first percent of fair value gap. Is that bullish or bearish? If it turns on a dime and stops and goes lower, is that bullish or bearish? The way I teach order flow, that is bearish. You don't have to look inside candles. You don't have to look at how many people bought or sold around a particular, price level. And then we want to see how this range here get used because it's a sell side imbalance, buy side inefficiency here. While we're above it, it can act as inversion. But if it's resuming going lower, and it's going to do that because we saw price trade below it here on a closing basis, that sets the stage for the afternoon, the PM session, post 1 o'clock Eastern time. Watch what happens, okay? It uses the low of this to send it up there, falls short of the first percent of fair value gap, breaks down below this gap, this one here, which is a SIBI. So this has to go into reclaimed bearish fair gap. Tongue twister. Reclaimed bearish fair value gap. Okay. We trade through it, come back up, a little bit outside the lines here, but that's okay. Why is this not problematic for me? What do you see here? A wick and a wick. Wicks are like what? They're like gaps. Okay. We have this consequent encroachment, and we'll look at the full range from there to there. Look where the bodies are in the lower half. If it's bearish, the wicks can color outside the lines. That's you're going to have to get comfortable with that. Okay, it's not a deal breaker, but for you, brand new, you want everything to be perfect. And in this market right now, I'm not getting as perfect as it usually can be. So you got to be a little bit more forgiving, be flexible with it. So it's supporting the idea that these wicks in here were in the lower half of it, even though we had a little bit of a wick here on the upside. The bodies are staying in the lower half of it. Order flow is bearish. The market drops down. Look when we go outside of it. The bodies enter back into this gap over here, this one. If it's bearish, do we want to see the bodies in the upper half or the lower half? We want to see the bodies being buried in the lower half. The wicks can come up here, but they can't drop bodies there. All of them have to be here. So the market sells off, trades back down into the other order block, or not order block, fair value gap that I mentioned in the live stream yesterday. We trade through it to the downside. We close below it right there. Now, what's going to happen? This is going to become a reclaimed bearish fair value gap. So it would look like this if we were just drawing them out. So that way the color scheme is consistent the way I teach you. Trade through it, comes back up. Look where the body stops. What's it telling you? Is order flow bearish or bullish? Where's sell side? Here, here, here. What time of day is it? We're getting close towards the afternoon PM session. Market trades one more time to consequent encroachment, drops lower, clears up sell side here, trades down into this wick, consequent encroachment. Watch. This is what you're supposed to be doing when you're back testing and recording your observations, studying these types of things. Girls, hey, come. So this consequent encroachment of that wick here, we trade down into that, and we leave the low there and come right back up into this gap. The sell side and bounce by center efficiency becomes, again, one more time, reclaimed bearish fair value gap, and the sell side here and here is formed. And one more time, they wick it through. This is a stop run. As soon as it did this, that right there, it's over. The rest of the session, they knocked out anybody that's trailed stop losses on shorts from here to here to here to here. That was a run on that liquidity. As soon as that candlestick closed like that, you have every reason to anticipate lower prices. This, at that time, becomes an inversion fair value gap. We were doing trader roundup discussions all during this time. All right, so the close on that candlestick, come on now. Close comes in at 494 quarter, open. Okay, so there's no volume imbalance there, so we got to drop it down to the wick there. Close 77 3/4, open 78. So there is that volume imbalance. So I have that good. All right, and then this here becomes inversion fair value gap. But when we ran up here and did this, and we closed here, look what the bodies did. The bodies tell you the story, the narrative. The wicks do the damage. So they kept the body closed below this bearish fair value gap here. So this is why, again, this is not supply and demand. There ain't a motherfucker walking this planet that's going to come back and say, look at this right here. This is a supply and demand zone. not when it's trading right there. No, that's not happening. They're not looking at that. Okay. That's a stale level to them. There ain't nothing stale. Okay. ICT's bread never goes stale. So, but I toast everybody else's bread. Here's the run on liquidity. The bodies are below that fair value gap. So that reclaimed bearish fair value gap that I showed you yesterday in the live stream. Okay. We're running buy side. We're running through it, clearing it. And then as soon as we close below it, what are we seeing here? The bodies have shown you confirmation that this was just a stop hunt. Look for the next PD array as a premium array that you can short on. Rally up, drop down. Rally up, stop hunt. This one, because we trade to a PD array, and look at the bodies here. Okay. Because this run didn't even go to consequent encroachment and it dropped down, all that was a run on rejection. Okay. That up close candlestick, that closing price, that's rejection block. Go look at month 4 of the 2016 private mentorship students playlist. And this, okay, rejection block. I didn't do that right. What am I doing here? Come on now. Get that off here. I wanted it to look like this. I'm hitting Control M on my keyboard, and what that does is it puts a little flag for me. If I was recording it, I would have to go back and edit this and then do this part over again. So it would look like I just did it the first time, and it wasn't right actually. So rejection block. All right, and then we'll just do it in the middle. So there's rejection block. It runs up, it hits it, clears the rejection block, and then sells off. When it does that, it doesn't need to take out that high because it's anchored to the basis of that fair value gap here. This one over here that I gave you yesterday in the live stream. So the logic is they ran it back up to take the bodies out. Remember, the bodies tell you the narrative. The wicks are allowed to do the damage. I don't need the wicks to clear. Okay, I don't need that. But it's selling off here, and it did it right before this big pump up. So the first premium array I can sell short on is this buy sign about sell sign efficiency. Carrying it through the range, it's going to act as inversion fair value gap here. So anything in here getting short is okay. Now, apply what I've been teaching you recently. Same logic now. The fair value gap right before a stop hunt that you clearly can see. Buy side, rallies. What's the fair value gap right before that? This one. My deuce, my deuce, my deuce. Runs up. The bodies are telling you what? Lower half, consequent encroachment, no passy, no passy. Where's it going to go? Sell side. Take the low out of the day and then continuously drop. First gap after blowing through it, that's the one you want to trade. You don't want to expect it to go back up into this one. So many people, ICT mentors, this is the one I would be interested in because you're a fucking clown. You have no idea what you're talking about. I never taught that. I never fucking said that. Okay. But you guys want to come out here and pretend you know something. And you're literally leading people astray. And you're using my name while doing it. So come on now. Stop. First fair value gap right there. Boom. Now, here's for your notes. In a trending day, how do we know it's going to be a trending day, ICT? Because I told you back in the live stream, okay, if we can close below this wick that was inside of the first hour's dealing range, if we can trade on a closing base below that, that sets the stage for lower prices in the afternoon, in the PM session. I won't be here during the PM session. Go back and watch the live stream. It's there. Choke on it. Here we have the run below that low. So we'll take this off. So that sell side there. It runs through it. In a trending day, after we have broken first hour's dealing range, this is not breaking it. This is them testing it and then retracing back in that I told you was likely to happen before it happened. As that candle was forming, before it even closed, I told you that was it. Just like I told you, this high was manipulation. Okay? First presented fair value gap after first hour's dealing range is broken. First presented fair value gap after that, that's the one you'll sell on. Right there. Watch, kids. Watch. You gotta call your mother. You better call your mother. All right, let's see. We'll start with the wick to wick first. I have to make sure I verify the close. 35 3/4. Open. 35 half. So this one's lower than this candlestick's close. So we have a volume imbalance. So you have to include that. Okay. I had someone also ask me, how am I making that pop up? One of the students actually said that I can do this, and I learned from their suggestion here in that regard. Hover over top of the candlestick that you want to see, and then with your mouse, left button click and hold down on it, and then it'll show you the details. And again, Trading View, I know you're watching. Add the date on this little table. That way, it helps because when we move around, you can see the values are changing. But I would really like to make sure that it shows up because I can take screenshots with these type of information. It'd be very helpful to me. Even though it shows the time and the date at the bottom, I know some of you are like, well, that's redundant. Work with the old man, please. Just please. So that it trades up into it here. Can't even trade to the consequent encroachment. Is that bullish or bearish? While order flow is bearish, this is a signature that tells you it can't even get to halfway point. If you can't even meet me halfway, why bother, bro? See how that works? So it can't even get to halfway. It's exceedingly weak. It's going to go the other direction. Okay. And it trades lower, 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 lower.